Hey guys, Angie here from Money in the Bank. Thanks for tuning in to this week's episode. A quick correction before we get started. Around the 22-minute mark, I start talking about student loan interest. And when I'm talking about it, I imply that if you are taking the standard deduction, which for a single person in 2019 will be $12,000 and $24,000 for a married couple, I imply that you would count that interest towards that deduction. So let's say you pay $2,000 of interest in student loans. I imply that you should take the standard deduction and not worry about that $2,000, which is actually incorrect advice. What you should do is, on the tax form, there's a spot to put that interest in and adjust your income before you get started. So what that is going to do is essentially allow you to take that $2,000 deduction and then apply the $12,000 standard deduction, which would give you $14,000 deduction instead of the $12,000 I implied. Hopefully that clears things up. Later on in the episode, I'm going to start talking about IRAs and 401ks, and I incorrectly said that they were tax-free when really I meant to say that they were tax-deferred. So you do pay taxes on them just later, or currently if it's a Roth IRA or 401k, you pay taxes up front, and then if it is a traditional 401k or IRA, you pay taxes when you take the money out. The other quick correction I wanted to note was when I'm talking about limits, I'm talking about an individual's limits. So if you are a married couple, you can go ahead and just double those numbers. Thanks for tuning into this week's episode, and I hope you enjoy.
Money in the bank.
Hey Brett, how's it going this week?
Good, Ange. How are you?
Pretty good. Well, that means this is another episode of Money in the Bank. Merry Christmas, Happy Hanukkah, and Happy Kwanzaa. I think that covers everything. This is actually going to come out on Christmas-ish time frame, so...
Probably a lot of people listening today when it comes out, so
well,
good on you.
Maybe people commuting for Christmas, or I feel like usually most years we're like in the car a lot. So great, listen to a podcast that tells you to stop spending money after you probably just spent a ton of money on Christmas.
Right, you got the stuff loaded up in the trunk.
So are you ready for your Christmas trivia question?
It's Christmas. Why do we have to do a trivia question?
Oh, this is an easy one. Are you ready?
All right.
What is the contribution limit for 401ks in 2019?
I saw they increased it.
Yes.
I don't know what they increased it by, though, so...
If you had a guess.
16,000?
No, 19,000. So it was
Wow.
18,500. It's going up $500 to 19,000.
All right, cool.
So that might not impact, a lot of you out there, but if it does, if you're somebody who likes to max out your 401k, just keep in mind that you can put a little bit more in this year. I believe the HSA contribution is staying the same. I think it's right around $3,400. And I believe that IRA contributions are staying the same as well, right around $5,500. And then, of course, if you have a simple IRA and you do that, that's its own kind of game. So, that these limits don't apply to you.
Yeah, so just for the people that are... consciously filling out and maxing out their 401k throughout the year, right, the total number that you're going to divide by, right, is a little bit different this year.
Yeah, it's a little bit higher. You can put $500 more in tax-free. So with that, Brett, do you know what we're talking about today? I gave you a hint with what I just said.
The 401k match increase?
You tax-free.
Tax-free revenue? Tax-free money?
No, we're going to talk about taxes.
Oh, good.
So if the 401k is tax-free, what does that mean, right?
It's not even 2019 yet. Nobody wants to talk about taxes.
Everybody wants to. Actually, you can't even argue with me about doing this topic because it was requested.
Fine. Okay.
So people want to know how to...
Those early birds, right?
So I'm actually really excited to talk about this because I feel like the last few episodes have been a lot more like philosophical type episodes, and this is obviously very factual, right? Taxes, it's not a lot of like guesswork, like this is how to do your taxes. So I'm going to talk about 3 different ways of doing your taxes, and they, I guess, vary in involvement, but they're going to get cheaper as we go. So the first thing you could do, if you don't want to do it yourself, is gather up all of your material and just go to your local CPA and say, hey, bud, here's my box of stuff and do my taxes. And I'll pay you whatever you charge, and I don't have to worry about it.
And so how does one find a good local CPA? Are we talking about going to like H&R Block or like any of those? Or are you trying to find like an actual accounting firm?
So it depends on your situation. If you have easy taxes, I mean, H&R Block, they're fine, right? Because ultimately taxes are a very prescribed thing. So everyone's going to get to the same answer no matter what. So whether you pay the guys at H&R Block like $100 or you go to a local CPA who might charge 10 times the price, you're probably not going to see a difference.
But what are all of those people that say like, I can get you more money or I can find the money in different ways? Like, is that all just like kind of sales speak?
Technically, there is one correct answer to arrive at. Now, maybe accountants, maybe if you go to H&R Block, they overlook a credit you could have gotten. And so sometimes people say, oh, I can get you more money. But honestly, for 99% of America, unless you're in that 1%, maybe the top 5%, I'll give the top 5% of the country the credit. Unless you're in the top 5% of people making money, owning your own business, like they're not finding you that much more money. They're just costing you a lot.
Right. If you're just a regular person that makes like less than $100,000 a year, or even whether you're married or single, your taxes are pretty straightforward, right? It doesn't matter whether you have a mortgage. It doesn't matter what your rent was. It doesn't matter what your
And
gas
they're getting
was.
easier because the deductions with Trump's tax plan that are in effect this year, he just raised the standard deduction, I think from like $12,000 to $24,000 or something like that. So for a married couple, and then from like $6,000 to $12,000 for a single person. But unless you have like tons of write-offs or deductions, like nobody's finding you more money because most people are going to be taking the standard deduction now. Like even in our scenario where we have a house where we're paying interest and all sorts of tax deductions, we donated to charity, we're still probably just going to be taking the standard this year.
Right, and we just unloaded like our whole house to like charity donation places.
So I mean, it's especially now that changed, most people will be taking the standard deduction. So are there times where if you've been doing your own taxes and let's say you overlooked something, are there times where you can go to an accountant and they can like review your work and find out that you missed out on like a $500 credit or something? Sure, that can happen. I'm not saying it can't. And if you're not comfortable with this world at all, then it's worth like paying somebody to do it for you. But it's also very worth shopping around, because if your taxes are pretty simple and you're just like going to somebody who charges you like a lot of money because you think like, oh, I'm giving, it's easy, I get to use the same person every year, or like, oh, they're the best or whatever. Like, I just urge you to, a lot of times you can go into H&R Block and get like a free estimate or something. Mm-hmm. And I urge you to do that, because if it's the difference of like paying somebody $1,000 versus paying them like $100, like it's worth just checking out your options. Because unless they're saving you $900 by finding all these loopholes, like they're not that good, right?
Right. Yeah, because my parents have like super straightforward taxes and they've been using the same accountant for 40 years. But they've never even considered shopping around, right? So whatever she charges them is just the going rate.
Yeah.
So good or bad.
So it's always good to shop around, but we say that with literally everything, right? Like,
yep.
Your internet, your phone plans,
your insurance
use
coverage.
my Google Fi code, drop that one in there. But yeah, it's good to shop around on all that sorts of stuff and make sure you're getting the best deal for you, right? Mm-hmm. Okay, so option 1 is dropping everything off. Now, a lot of people, this option is appealing to a lot of people who don't want the hassle of doing their own taxes. I actually think it would be, maybe I'm a control freak, but I think it would be like more nerve-wracking, because like, what if I missed giving them a receipt, or what if they didn't know about what if I forgot to give them a slip for interest on one of my bank accounts, and then like that doesn't get in there. So I'm a control freak. I do the middle ground approach. So I don't go and pay somebody to do them for me, but I actually use like TurboTax or H&R Block online, and I put in all of my own information, and then I pay to use like that portal. So to me, that's like a good middle ground, because it's going to be significantly cheaper than getting them done somewhere. Mm-hmm. But it literally walks you like step by step through everything. Like, here's your income section, here's all of your credits, here's all of your deductions, and it's very straightforward, very easy to use. I've actually turned a lot of people on to using it instead of paying somebody else to do their taxes. And I mean, typically federal can be free depending on your income level. I think if you make, and don't quote me on this because I know TurboTax changes it every year, but I think like last year, if you made less than like $70,000 or something, it was free to file your federal taxes, and then it was like $29.99 to file your state taxes.
Right, and we're using TurboTax as an example because that's the one that we have used personally. So I mean, the other ones are pretty similar softwares at this point. They all kind of had the same kind of like walk you through with cute little pictures. Through did you buy a house this year? Did you get married this year? Whatever, right? That kind of thing. So.
And I know H&R Block is another super common one. As is, like, there's a lot of other ones out there. And I do want to clarify one thing again, which I've already stated, but it's, again, one of these softwares is not better than the other one. The important thing is that you, like, go through all of the categories and make sure you fill in everything correctly. Because one time I was helping a friend out with their taxes, and they were like, oh, can you just look over and make sure I didn't screw this up? And I was like, sure. And I was like, oh, like, you're using a different software this year than you used last year. Like, why is that? Just out of curiosity for my own, like, maybe there's something better to use. And they were like, well, because, like, this one gave me $50 more. And I was like, well, that's not how this works, right? Like, at the end of the day, it is, and it's like an equation to solve. And there is a correct answer to get to. So if you're getting different numbers out of the software, odds are that you didn't input something into one of them.
Right, the same way.
Right. So I would just check your work and make sure, like, see what your income in one is and and compare to the other one if you want to check your work that way.
Right. Because if you've ever, I used to do freehand taxes for business stuff when we had our own company. We did that as part of college also for one of our courses, was to just learn how to do your own taxes as a business through the tax forms that the IRS provides you, right? You do yourself. And it's super, it looks like it's super confusing from the get-go because the form is so massive and there's so many different options and checkboxes and whatever. But if you do it one time, it's basically a choose your own adventure. And like right from the beginning, it's like, did you do this? Yes or no? If yes, then like skip down to basically the bottom of the form. And fill in like 4 more boxes and you're done, right? There's not like if you play within the bounds and like you're one of the easy ones to figure out, the whole process is like really not complicated.
Right.
You shouldn't worry about like, getting another extra like $10 or not or whatever, saving thousands of dollars because you're the default, right? Like the whole system works around like you don't make enough money for the IRS to even like equate you into the program. So all of the rules and the complications and like the hardcore math and the big deductions that you can actually get are from the people that are making hundreds of thousands of dollars a year, right? Or more.
Well, there are some really substantial credits as well if you make less than like $20,000 a year or $24,000 a year. So there's kind of like 2 extremes.
And there's some other weird ones where like, did you buy an electric vehicle this year, right? There's some very specialized situations also.
So, definitely read through the credit section. But Brett actually spoiled the third option. So thanks for that. But it is, you can actually just go online and go to the IRS website and download the forms and do it like by hand long form if you want to. And if you're doing like a standard deduction, I'm pretty sure you can just fill out like the 1040 easy form.
Right.
And it's like very basic. It's like income, standard deduction, and boom, you're done, right?
Yep. Mm-hmm.
So there's definitely like, you can definitely do that. I haven't historically, but again, it's because like I like that everything's organized for me. And the other thing that I like about using the online software is that it retains like my prior tax returns in a digital format. Yeah. So whenever when we get a new mortgage or, when I apply for a new credit card and they're like, I need your last 2 years of tax returns, it's so easy for me to access those. Or if I did the longhand form and then I had to like send it to the IRS and then I had to get a copy back, like that would be a lot more for me to keep track of. And as somebody who doesn't have like a great file cabinet, I feel like millennials, like we don't really do file cabinets the way like I remember growing up, like my parents had several file cabinets and like we don't own one.
Or like at least a dedicated space in the house for like all the important papers, right? I know we had like a closet that was just like filled to the brim with like boxes of papers of like taxes from the last 5 years and like my old homework and like all kinds of weird papers and stuff.
Right.
But
And so I don't really want that. And so it's easy for me to do it online. It's all on there. But it's, yeah, you can totally like do it by hand. And if you've never looked at the form, I encourage you to just like go to the IRS website and like take a look at it, like just to see what somebody is filling out on your behalf, because honestly, it's probably so much easier than you ever thought.
or if you do use a CPA or TurboTax, they still output that form.
Right.
They still they just take your information and translate it into like checking those boxes, the right boxes on that form. So take a look at what they selected the last year, and maybe you just do the same thing this year, and then you just save yourself a couple $100 and from a CPA or whatever. If your taxes are basically the exact same, you're paying the same mortgage or you're renting in the same place and your job's the same, and like if it's all the same, then just check those same boxes. Just fill out the form the exact same way it was last year. Change the numbers around to be, if your income changed the dollar amount or whatever, and there you go. The other thing I thought is I know there's audit protection if you use like a CPA, right? If you get audited by the IRS and like a CPA does your taxes, then like they signed off on these taxes were filled out correctly, so they're the ones kind of on the hook for that, right? But if you fill it out yourself with the forms, then if they come back to you, then
so
is it your
define
fault?
they're on the hook, because I actually know of a good story where somebody was using a very reputable CPA in town, paying them a lot of money to do their taxes, and they made a $5,000 mistake over the course of 3 years, and then that person got audited. Guess who had to pay that $5,000? Sure as hell not the auditor.
or the
Or
CPA.
the CPA, right?
It wasn't the auditor.
Sorry, not the auditor. But the CPA did not have to pay that. It still comes out of your wallet. So whatever audit protection they're talking about, I mean, that's just like, yeah, we'll take care of like the, dealing with the tax man for you and figuring out what this amount should be. Or like producing, we'll save copies of stuff so you don't have to like reprint off all of your bank statements. But like if they made an error, that might not come back on them. If the IRS is owed money, they're probably going to come back and get it from you in one way or the other.
Okay.
So a lot of those like audit defense things, that's just like business talk. Now maybe there are some CPAs out there that are like, yeah, if I make a $5,000 mistake, it's coming out of my checkbook. But I would guess that that's probably not the norm or the
they're
most
charging
common.
you a whole lot of money to do your taxes.
Right. So and
you basically have insurance.
I feel like that's the biggest thing I hear is like people are so scared to do their taxes because they're scared of getting audited. But like if you get audited and you made a mistake, you just have to like pony up the difference. And honestly, if you're in a situation where you're taking the standard deduction, the likelihood that you're making a mistake is so low, like you're not.
Or the odds that you're going to get audited.
Or the odds that you're going to get audited.
If you're anywhere near qualifying for the standard deduction or well within it, like, yeah, they don't, you're small potatoes, right? Like, what are they going to get? Like an extra like $100 from you? No, they're going to go after somebody that like didn't report like $10,000 on,
right.
Or more.
Or like $1 million. Yeah. Like
right.
They're going to go after the guy that's like hiding a yacht, right? Like
or Al Capone.
Yeah, Al Capone. Yeah, he's not dead or anything. So yeah, I mean, I think there's this like, now I will say taxes in the U.S., and again, we're talking about the U.S. Sorry to all of our international listeners. Thanks for bearing with us as we drone on about things that don't matter to you. Our taxes here are by far probably the most complicated. And it's actually interesting because somebody like suggested putting in like a simpler method, and it was basically turned down because it would cost like thousands of people their jobs, right? Mm-hmm. Like there's gain by keeping it this ambiguous. So it is complicated, but it's not like overwhelmingly complicated. Like Brett said, like look at the form that was filled out last year and just like use that as a launching pad, right? But don't be so scared of it, because ultimately, if you're a W-2 worker, like you have income, you've already paid taxes right out of your payroll. Those are usually pretty close. So if you get to the bottom and you're like really far off, I would check your math, right? Like if you're owed more than you paid in taxes, that doesn't pass the sniff test, right? Unless you got some credits and stuff. But, so there's some easy kind of checks there. But honestly, like I feel like this has been another thing where people have scared the average person into thinking that taxes are so complicated and overwhelming. And we're here to tell you, like, they don't have to be, right? It can be confusing. And I get if you're not used to doing it, it can be very confusing. But just, take some time to read through your statement from last year. And take some time. You can literally go to TurboTax or like Quicken Books or H&R Block. QuickBooks, yeah. Right now. And they have like free estimators where you can just put in like your income and if you paid any like mortgage or, various deductions. Not all of them. It's not a comprehensive thing. It's just like a little dashboard. So you put in like maybe 6 values, right? And it like spits out a rough estimate of where your tax return should be. And like jot that number down and then like see, when you actually get to your final number, how close that was. And that's another good way to like check and make sure you did everything correctly, right? Mm-hmm. So just don't be so scared of it. And the other thing I want to talk about on this topic and on this episode is like how to get ready to do your taxes. No matter which of the 3 options you're choosing, you kind of have to follow the same process, which is why I say by the time you get to that point, like that's not the hard part. The hard part is like all the legwork you have to do to get there, right? Which is making sure like, okay, I have all of these bank accounts and I have my W-2 and did I have health insurance this year and, all of those things and then gather all of those documents, right? So like, did you pay any student loan interest this past year? If you did, you need that statement and you have to have all of that information and either, you need to have it or you need to basically put together a folder and hand it to a CPA. Right. But either way, like that's on you to gather all of that, right? Mm-hmm. Which to me feels like the hardest part.
Well, yeah, because you have to do it no matter what. And it's a lot of the stuff gets sent to you in the mail, right? But you have to make sure you get it all.
Right.
And that's what it all says, is make sure that we sent it to the right address. And if you moved, like do all the banks and everything, have your old or your new address, not still your old one.
Well, and beyond that, like I know W-2s are typically due to you by January 31st. So you should have that by January 31st. But like banks, I don't think their due date is until sometime in February for like their, interest statements. Mm-hmm. And I'm pretty sure like your health insurance company also isn't due until like towards the end of February on, confirming that you had health insurance for the year. So there's like a lot of this stuff that like, I'm always somebody who gets super antsy and like as soon as it's January 1st, I'm like, all right, I want to start doing my taxes. But honestly, you kind of have to wait because you don't have everything you need.
But as a regular person that, makes under $100,000 a year and didn't, I just had a small amount of money in the bank or let's say $40,000 in the bank or something, I didn't get a crazy amount of interest on that. Do I need all of those numbers if I'm going to do the standard deduction anyway?
You still need to report that income. So, let's kind of back off your really aggressive example of somebody who makes a good amount of money and has a lot in the bank. Let's just go simple. So you make $50,000 a year, which is the median. You have $10,000 in the bank, and it's an Ally because you've been listening to our podcast for a while, and you know that they're giving about 2% interest on their regular savings account, no strings attached, no fees. So you're earning that 2% on your $10,000. So you earned $200 last year on your money, right? Even though it's only $200 and you made $50,000, you still need to report that $200. So the reason that matters is that will increase your tax bill. So let's say you're in the 15% tax range, you owe $30 on that money. Mm-hmm. So you do need to wait for those statements because it's income and you're going to owe taxes directly proportional to that income. The statements that matter less to you would be like your student loan annual statement, because if you, let's say you paid, $6,000 on your student loans last year, but of that $2,000 was interest. Now, if you weren't taking the standard deduction, you could report that and say, I'm going to deduct $2,000 from my income. So instead of $50,200, I made $48,200, right? But if you're taking the standard deduction of $6,000 anyways, then that doesn't matter anymore because that's greater than $2,000. So of course you're going to take the standard.
Right. Okay. So if it's a credit to you, right, any of the deductions you'd list, then it doesn't really matter if you're going to go standard anyway, which right. Again, most people probably do. If it is income related, then it's super critical and you need that.
Correct.
You need that document.
Yep. Yep. So, like I said, if you kind of wait until mid-February, late February, you should be in pretty good shape. But the other great thing about doing everything online is you can, if you're well organized, like if you're like, this is the lender my student loan's at, this is the lender my car payment's at, this is where I do all of my banking, and this is who I have health insurance through, you can just go out to their websites, and sometimes you can pull those documents down much, much faster than the time it takes for those documents to come to your front door.
Right. Yep.
So
I know I can do that with my employer for sure, right? You can always go out to there and find it like immediately almost.
Yeah.
Or they'll email you and say, hey, your W-2's ready. But yeah, it doesn't come to your door until another month at least, right?
Yeah. So if you're pretty proactive, you can pull a lot of that stuff down. So yeah, I kind of encourage people to start thinking about that, even though it's, still December, we're at the end of December. So just start, if you want to start thinking about it, maybe you have some time off the next few weeks and you want to get a jump start, just start making a list of like, this is where all of my stuff's at. This is what I'm going to need. These are the documents I'm going to make sure I need to have for my taxes this year. And then as that stuff comes in, you can stay a little bit more organized and stay on top of it. And like I said, once you get all the documents, why not just plug it into TurboTax and see what you come up with, or try the long form, right? And just see like if you can get through it yourself. And maybe you're not comfortable enough to like submit that this year, but if you do your own work and then you like compare it against what your CPA has and you're like, oh wow, I got to the same answer, then next year you can just save all that money.
Right. If they're just going to look at what they did before and they probably just do it from scratch every time, but it's the same thing for them. It takes them probably 30 minutes to do your taxes at the most,
if that,
for a couple $100.
I mean, if you're somebody doing a 1040 easy, then it's taking them like 5 minutes.
Yeah.
So just keep that in mind. Like if you're on the standard deduction, it is extremely easy to do your own taxes.
Mm-hmm.
So. And even if you're not, we've itemized for probably the past 4 or 5 years. Brett and I have, and I still do our taxes. I actually am one of the weird ones that enjoys it. So it's fun for me. It's like therapeutic, I guess. Very relaxing.
She enjoys it a lot. She's just, being bashful.
So yeah, Brett, you actually mentioned that for your company you did long form. What about personally? Have you kind of experienced doing it on your own, or going to a CPA, or using an online software, or kind of anywhere in between? Like, what did you used to do before I forced you to let me do all your taxes?
Since I've been reporting taxes, I started going to the person that my parents were using because they were already going anyway, and so just like my stuff just went along with it. At the time, my stuff was going to their house, right? Like, so all of my statements and bank statements and all that stuff was all going there. So we just all put it in like a box or a folder and just like took it to that CPA, and she just did mine along with my parents. And then I ended up moving away, so then I ended up looking for digital solutions, and so I ended up using TurboTax like the first year. I never did my own personal taxes freehand, even though I know how to do the business ones, just because I'm more digitally focused, and the software is a lot easier, and it's easier to retain it digitally. That was the big win for me, was just like, I don't have to keep track of this. I don't have to like shove this in a drawer and like move it from house to house or like keep it permanently. It's just all this digital copy, which from the CPAs, you can also get digital copies now also.
Yeah. Honestly, I haven't even checked, but maybe on the IRS website you could. I don't know. Mm-hmm. I'll find out and I'll report back in the next episode. It'll be like a cliffhanger, like, ooh, can you get a digital copy of your taxes from the IRS?
Yeah. I don't know, because TurboTax, the default, like the cheapest option on there, I thought, at least a couple of years ago when we used it, that didn't come with it, right? It's like one of their, like, it's like their mid-tier options. Like getting
no, so kind of. Now, on their lowest tier option, you get it digitally and you can save it down as a PDF, but they don't retain it for you on their website. Where we have to pay for our taxes because we have a business that we set up, so it's just all lumped in with that. So we have to like step up one of TurboTax's plans, right? And with that, we get like the online retention. Where like we don't even have to worry about saving down our PDF because we can always go back to the website and grab like our last 4 years or whatever. But even on their cheapest option, like their free federal option or $29.99 state, which I'm quoting last year's prices, so it's not my fault if they raise prices. But even on that option, like they e-file it for you, and then you can save down a PDF.
Right. Okay.
So, but yeah, they just don't retain it on their website. So you kind of have to make sure you save it. You know, as much as I advocate libraries, I probably wouldn't like go do your taxes at the library and like save it onto the library desktop or computer, right?
Put it if you're going to do it on the computer anyway, save it somewhere like Dropbox or Google Drive or
somewhere secure.
In your email.
Yeah,
somewhere.
Exactly. Don't save it out to a public place, right? Mm-hmm. Like don't post your taxes on Facebook. So, all right. Well, I think that's everything I wanted to cover. Is there anything else you wanted to add?
No, I think that's good.
Awesome. Well, hopefully this kind of helps people as we gear up for the very exciting tax season. Don't forget, taxes are due April 15th. You can file for an extension if you need one, but just get it done, guys. Just do it.
My manager extends to October every year.
Yeah. Why?
Don't be that guy.
It's just like delaying the inevitable. Like get your money or pay your money, whatever you need to do. All right. Thanks for tuning in, guys. Hey guys, thanks for tuning in to this week's episode of Money in the Bank. Make sure to subscribe to us on the iTunes or Stitcher app so that you get weekly alerts every time we post a podcast. Or if you want, you can visit my website, moneyinthebankpodcast.com. And if you want to reach out with any questions or further comments, please email me at Angie@moneyinthebankpodcast.com. I look forward to hearing from you.
Money in the bank.